With me today is Nicolaj Højer Nielsen. He began his journey as a founder and operator and has since become one of the most active early-stage investors in the Nordics, backing companies like Capdesk and Pento. Today, he's deeply involved in the startup ecosystem as an investor, ecosystem builder, and educator, teaching about startups, funding, and scaling companies. Welcome, Nicolaj.
Thank you.
So you have a background as a founder, and now you do full-time investing. Do you think, or has your background as a founder shaped the way you evaluate other founders today in any way?
Yeah, I think so, and most likely both for good and for bad. Because the good thing is, of course, you have some experience in that you saw what worked for you. So you have like your mental model of what a startup is and the people that it takes. So I think any founder to an investor have these models and say, hey, that's what I look for. And of course, the hidden danger there is that it also sort of limits yourself because it's a sample size of one, right? You say, hey, this didn't work for me, therefore you shouldn't be doing that way. But yes, it is of my knowledge base of especially in the beginning when you start business angel investing, what did you have of experience, right? I was a new angel, but I was an experienced founder. But the more I invest in startups, and now I'm on year, I think 15 or 17 of investing. Of course, you are more and more influenced by the prior startup investments you did than the startups I did 20 years ago.
Yeah, that makes sense. But are there any of the mistakes that you made as a founder that you now see some of the founders that you meet or the founders in the market repeat?
Yeah, it's like so. Long story short, my first venture-backed startup actually went belly up, and I can honestly say that was because of my own inexperience. You know, it was personally positioned. It was within cybersecurity. We don't have to go into the details, but of the 20 big startups mistakes you can do, me and my co-founder did all of them. And that's why they went belly up. And of course, you will say it's great. It was for other people's money. It was also some of mine. But so of course, all these things that you see in on the team side, on how you work with customers, all those that I made, it's classic, right? Because the way I see entrepreneurship is it's a craft. It's not a science.
But I'm curious, like you talked about like team and sort of issues with customers. Like what were some of the concrete examples of like mistakes you made in terms of team? Was it hiring too many or hiring the wrong kind of hiring the right people, hiring the wrong kind of people?
I think one of them, due to our inexperience, were what Steve Blank called premature scaling, which is basically like, hey, you try to conquer the world and actually getting venture funding can be bad. Because what you're trying to do is you're not trying to solve a problem for one customer. In one case, it was one bank. No, we got all this money. Now we try to solve it for 20 banks. And if we have to try to solve it for 20 banks, that means that we have to hire a lot of people and we have to scale very fast. Where it's one concrete example of this. And I think that combined with our inexperience in recruiting people, because I would claim that a big part of a startup's future success or failure is determined by, the quality of the first 5 people you have on board.
Yeah.
And that's what I look for as an investor. I try to look at for, are they really magnets that can attract the right team? And that requires special talent, right? You're not finding your best early stage employees on a job ad, right? You go out and convince these people that you're on this mission and everyone wants to work with you, even though you have this high risk and low salary or whatever. And that we didn't understood at all. And actually, I would claim that a startup CEO's primary role is, one, making sure you don't run out of funding, and 2, attract the right people. They shouldn't be involved in a lot of other stuff, right? And attracting people to that is, I would say, a full-time job, because you have to go out and use your network and your extended network and convince this CTO or engineer that he or she should really join your startup for all these not very logical reasons. And the same way you're selling a story to investors that they should give you money for all these non-logical reasons. So that maybe also ties a knot to what you're looking for, because there is a big part of storytelling involved in being a startup founder, because you have to bend the universe, and the way you bend the universe is by convincing other people that they should join you, either as investors or as partners or as employees or whatever.
Nicolaj, when you then meet founders, what are some of the signals you look for, both good and bad? Are there things where this is a red flag right off the bat, or are there things like that gets you extra excited?
What makes me excited is normally strange people. I saw a post on LinkedIn last week, a few weeks ago, and really got to me because they were sort of, it was a VC who were following many of the successful founders, and they saw one common trait was actually strange life choices.
Okay.
Strange life choices, like any one of them saying, hey, I'm skipping my engineering degree and go traveling in South America or work as a volunteer or build my own house I think, and also actually I like to talk about childhood with founders, because what I'm trying to do is I'm trying to find out what motivates he or she. And that can be a lot of things, from coming out of poverty to want to prove something, to want to stop world hunger, but there has to be some kind of passion that drives this irrational choice of starting a company, because starting a company is irrational.
Are there things when you meet a founder where you fairly quickly think, okay, this is a red flag? I mean, it could be the opposite of this, no drive, just wanting to make money for money's sake, or...
I can tell a story about one I overheard. I overheard a founder or potential founder talking to another at a conference, whatever, and saying that he was in doubt whether he should join McKinsey or start a company. Then I'm just like, then you're not in doubt, because starting a company is so completely... Both are hard, by the way. I have the deepest respect, and some of the smartest persons I know have worked their ass off McKinsey, and it's a great launch pad for a future career. I normally say that I never meet dumb people who work at McKinsey, right? But I'm just saying, if you're in doubt, then you're not in doubt. And then that would be, I think that is one. And of course, another red flag would be not wanting to invest yourself. Because if you start a company, you're doing this marshmallow test where you're saying, hey, I give up this right now for this in the future. And that is both your job security and your salary, whatever. And I see a bunch of middle-aged people like me who in theory want to start a company, but only if they can continue having all the perks of corporate life. And it's not only for cash flow that's a bad thing, but it's also for the signal you're sending, because you're not really into this. You want your package, your company car, whatever. It's not like you should live on a stone, but you should be willing to co-invest together with the other people that you want to join the company. And that is both employees and investors.
Nicolaj, when you have invested in a lot of exciting companies, what is your investment philosophy?
Well, it's a little bit different now from 15 years ago. 15 years ago, I thought it was all about spotting the few winners and be deep into a few. Like I want to be Mr. 10 or 15%. And both because now I have more liquidity, but actually more from experience, also research, I'm more Mr. 2 or 3%. Because it is so extremely hard to spot the winners. Even when my deal flow going from 500 cases a year, and then I invest in, let's say 5, so maybe 1%. And you think, oh, now I have chosen one. Actually, it's not. Because out of these 5, it's maybe one of them that is delivering the value. And it's actually 1 out of 30 that is giving you a big part of your return. And that means that if I limit myself and only invest in 1 or 2 a year and was Mr. 10%, I think that I would lose a lot of these, what you call the power law in venture capital, meaning it's a few, very, very few. So a business angel's ideal portfolio should most likely be in the hundreds, maybe 500. And, coming back to, there's actually a fund in the US that's called 500 Startups. I think they are now on 2,000. So concentration in both VC and angels is one of the biggest mistakes I think you can do. And so I'd rather be Mr. 2% and then continue investing in that company if it turns out. That's my philosophy. So my philosophy, of course, to go from 500 to 5, but then invest in 5 to 10 a year.
Is it pretty broad, sort of the types of startups you go into, or is there any particular traits that you look for? We talked a bit about the finder drive, but are there any
It is broad. It can be biotech or it could be a dating app, right? To take the two examples, right? I think what my unfair advantage is, and that's why I'm still focusing on that despite I moved to Andorra, is that the problem is I meet you, Esben, at whatever, even at a conference, whatever, but I don't really know who you are. The good thing is you are in Scandinavia. I know 20 people who know you. So where have you worked before? Why did you leave that company? What do other investors? Maybe you started another company. It's okay that a company went belly up, but why did it went belly up? That I can do in Scandinavia, that I can't do in Germany or France or whatever. So when I say my investment strategy right now it's actually Scandinavia outside Stockholm, because Stockholm is sort of an ecosystem on its own. And so me as an outsider will not be invited into the good deals there. But if you are in southern Sweden or Norway or Denmark, I know a lot of people that know you.
Yeah. So you will do that sort of person due diligence, so to say. Yeah. Yeah, and that was going to be my next question. Have you ever passed on a company that has then gone on to become a big success?
Yeah, but that was actually for another reason, and I can talk about that open. It's like I was introduced to FlatPay, the Danish payment company, and it was actually by trusted contact, which I trust a lot. The reason why I said no is just like I have no insight into the payment industry. I thought it was saturated, whatever. I didn't know these persons well enough. And of course, now my trusted contact made fun of me and said, hey, you should have joined FlatPay. And I would most likely have done, 100, 200x already. And I think that's the best example.
Let's say you have 50 new pitches in your inbox. Where do you start to sort through? Is that looking at a team first, or how do you even start to sort of segment what could be interesting? And
There are, of course, areas where I know a lot myself. So if you come to me with a detailed signature company or something like that, it's just like, hey, I know this, because I've created companies in the past. But the moment you get out there, the way I normally say it is, if I don't understand it myself, then other investors that I trust should put money in, right? And that sort of expanded a little bit. So for instance, there are people, I invested in a health supplement brand in Denmark called IOS. They're like a competitor to AG1. I would normally never look into such a case unless that I knew the founders myself. I didn't. But one of my co-investors, which I known for 15 years and I really trust, and he's much more into this B2C space than me. He said, hey, I know these guys. I use the product. I like it. I'm going to invest myself, and they can just outperform. That was the reason why. So I think there would be a group of like 20 people. Maybe, less than 20 people that if they call and say they go into a case, I would most likely invest myself. But this is also 20 out of 1,000 people, you can say. And that is because for historical reasons, I trust their judgment extremely well. In general, I'm very skeptical about VC's judgment in general. So, but it's still like, but there are people that I think that in their specific space.
But let's say, Nicolaj, that if you have the 50 deals, and you're probably not going to send all the 50 deals out to check with your network, what would be sort of the first sort of what could you say filter you apply? Is that related to, do you look at the opportunity, the team, or what is it that you like? Okay, these 10 actually are something I want to just check with my network.
I think many of them you always believe that your idea is unique. But I have most likely seen it before. So there's a lot of pattern recognition is that we solve right now. Of course, one out of these 50 in my inbox will be 20 of them saying we do AI for that segment of business to business. We want to make it easier for managers to manage their employees by AI or whatever. We want to improve logistics, whatever. So basically whatever. So there is a lot of gut feeling about, is this really unique? And do they have a long-term competitive edge? But it's gut feeling, I'm no expert. And then together with that will be, okay, if I believe that this could be an interesting space, who are the people behind? And sorry to say, that would be just looking at who they are, what have they done for. So if you come to me and say, I have really developed a new AI algorithm that it's much better than OpenAI or Anthropic or whatever, hey, I cannot evaluate that. But if you are a person who had never worked professionally with AI, either in a big company or as a published researcher, I have no other reason to believe that it's not true. Mm. But if you were an AI researcher at Meta's headquarters for 5 years and now you're back in Norway, I would think, without anything, I think you're onto something, right?
And just sort of going a little bit deeper on, again, now we just assume the 50 deals in your inbox. Where do you typically get the best deals? Is it your inbox? And like it could be an inbox through a network, of course.
Yeah.
But is it typically cold, or is it through like where if you were to analyze
I actually made an analysis last year. Where did my 30 investments came from, or 35 at that point of time? And it's really a mix. It was a mix of cold coming out or whatever. It was a mix of leads from VCs. Say, hey, this is too early for us, Nicolaj, but they're onto something. It was lead to other business angels. It was my personal network from working that ecosystem for 18 years, then a former Pineo employee or former whatever employee, which give a lot of trust. But as I said, also a lot of cold ones. So you can say, from a qualitative perspective, my deal flow, a lot of them are coming in cold, but conversion rates will be, if a certain VC sends something to me, the conversion rate might be 20%. But in average one in my LinkedIn feed is 1%. But I still have this strategy of having an open door. So I actually have an open door 1 or 2 times a month where anyone can book time in my calendar. And you can say that inefficient, but as an early stage investor like me, I also have to look into the non-obvious thing. Because the one who are already connected to VCs and have the perfect CVs, they will find their way through. But the random person will say, hey, I never worked in that ecosystem before, but I just solved this big problem. And now I have the first customers or whatever. I want to make space for that.
But Nicolaj, you get in on some very, very exciting deals. What do you think? What is your value as an angel? And has also your view of what you bring changed over the years?
I've become very cynical. I actually think that most, if not every investor adds so little value, and that the biggest thing we should do is provide capital and take the phone when the founder calls and don't get in the way. And then, of course, the caveat is that sometimes you actually have investors that have the time and the know-how to go deep. For instance, I'm an investor in a Danish company called Handy Hand. That is a platform. It's like Fin.no for services, right? And we were so lucky that I knew another guy, Kenneth, who was sort of building the same as my investment, and they merged. And this guy is an investor, but is also extremely deep, for the reason that he knows the space because he actually worked at Schibsted and eBay before. So in these companies where there are people that have the time and the know-how to go deep in, I have the deepest respect, and they add so much value. And I really say that in this case, that for Handy Hand, Kenneth adds 100 times more value than I do, right? But the average deal you're in, you are not the expert, and you're not the ones who have really time and know how to go in. And that means that you should avoid messing up stuff. So what we can do is we can be a signal, and a very important signal. So what are VCs looking for? Early stage VCs, they're looking for which are angels that are in. What are next round VCs looking for? They're looking for who the first VCs are in. So their filter, if you're an American fund doing Series A in Europe, one of your most important filters will be who's on the cap table, because there's so many. And that will mean that we as early stage investors can do this signal for next round, because we are voting with our wallets, right? We're actually putting on thing, and then we can make introductions, and you'll be taken seriously by that specific fund. And then, of course, there's also pattern recognition in entrepreneurship. So especially in the early days, first-time founders can get a lot of value by just calling and say, hey, Nicolaj, have you been in this situation before? Or do you know an expert in that area? And that we can do. But operational-wise, I see as many investors who are destroying value as are building value. And too many founders that have to manage that relationship with 5 old guys like me trying to sit and have opinion about your go-to-market strategy in a space we know experts in. Yeah.
No, I think that is a learning that's come for me in recent years. Because I come from consulting, and I come from venture capital, and I thought, I can help a lot. I can help a lot with strategy and all the operations. I've worked in a startup and all this. And what I've learned, especially with my most recent investments, is that it's the network to potential clients or investors. Those are the two things absolutely the most valuable for the companies I've invested in. All the other stuff, yes, it could be nice to have a discussion every now and then, but they know much more about the businesses they're running. But if I can open just one door to the right investor or potential customer, that can be enough. Because I don't invest very large tickets, so you have to come with something, right? And that for me is that network. And it seems like for you as well, like you have that founder experience, but also you built an amazing network over the years, right? I assume that just brings a lot of value.
Yeah, it does, and I think that's what you can do is, but it has to. I basically say to all the founders that it has to come from them. They have the ball. They will have a known way to do it. I think the right way to do it is that when they're raising after an angel round, there's maybe an early stage VC round, and then they say, hey, in the Nordics, if that's what are in Europe, there's these 50 funds we really would like to talk to. And then they send us a Google Sheet, and then we can say, hey, I know this guy, I know that guy, and then we do the introduction. That's where we can bring a lot of value. Or as you say, hey, do you know someone in Novo Nordisk in that department? Or do you by any chance know someone in Carlsberg? Or do you know, it's client side, right?
Yeah. Do you have certain angels that you typically have on speed dial because they will also see good deals? So like if you get a deal, I have at least just a few like, okay, am I allowed to share this deal? And who do you want to share with? And then I'll mention these people because I know they were typically ones who can share the other way. Or how does that work for you?
Yeah, I try to institutionalize a little bit because I was asked by so many that they could be in my deals. And I said, how can I do it? And I think that most business angels networks are not working. Those are the formal one. So I created my own one where I'm sort of the lead. I'm the dictator of that business angel network because I know to get it work, I have certain metrics in place. So the way it works is like I share, they all sign an NDA, and that means that I share my bottom funnel deals with them, and that adds value both to them, to deals, but also to the network or to the founders, because they know if I put in 50,000 euro, there might be 5 others. So we can do a 300,000 euro round relatively easy. And that's also what I say to founders is that the first task is to find one angel that is committed and networked. And then you will ask that angel, say, he or she, do you know 5 other that you trust? And these 5 other will take it seriously because they know it comes from Esben. And the first question I will ask, Esben, are you putting in money yourself? So the introduction only works if Esben is showing willingness to invest. And then we can talk about ticket sizes because people have different lives and whatever. But if you sent me a deal and said, Nicolaj, this is really cool. Great, Esben. How much are you investing?
Yeah.
Right?
And Nicolaj, this is, I don't know this, so this is just my hypothesis, and I want to get your sort of take on this, but has the whole angel landscape evolved in the Nordics? So I started venture capital in 2017, I think. And at least in Norway, this whole startup scene wasn't as developed. I mean, Sweden, especially Stockholm, have always been further ahead. Both Denmark and Norway has sort of come up. And with that, you also have people who've been founders, you have more angels, there's been more interest in the space. So my hypothesis is that the whole angel landscape has also evolved a lot. But you have been here longer than me. You've been an active angel for a long time. How do you see this? Is that correct, or is it just my view of the world?
I think one of the reasons I'm actually here in Norway this week to teach, and one of the reasons why I love to teach is going back, right? Because when I was a young student, I actually had my first IT company in 2000, and I think the reason why I didn't dare to go full time was because there was no Esben or Nicolaj, right? If there was an Esben or Nicolaj that would have been giving me 500,000, said, Nicolaj, wait with consulting for 1 year. Give this a chance. You're onto something. I think that I would have created a company already then instead of waiting 6 years. And of course, there are many good reasons and blah, but so at that point of time in the early 2000s, the amount of angels and this entire ecosystem that you can tap into. It was like, I remember when I started, and now an anecdote, when I started being independent in 2007, 6, 7, I remember cutting out from Danish Næringsliv Børsen, the Danish one, every time there was something with entrepreneurship. And after 5 or 10 years, it's there every day. You can't open the newspaper there. So it's sort of become from being abnormal to become the normal thing. And you see, like we maybe in Denmark, we're in the third wave where the first founders there become sort of the first angels, and then the next and the third. And for each round of exits, there come more angels and more VC funds. And actually, I think now that there'll be too many early stage funds in Scandinavia, and actually some of them also closing down. And I think they're not raising around because I think there are too many. So it is important that way also on the angel side. And it's quite fun because now I can see it from the outside because I moved to Andorra, that is between France and Spain. So you can say Barcelona area would be my home market now. And it reminds me of Copenhagen 15 years ago. There are funds, there are angels, but much fewer, both angels and VCs. So I think and I like to say there's no lack of capital now. There's only a few areas where there's lack of capital. For instance, like deep tech, medical, there's lack. But if you're an IT, you will not have problem raising funding if you're onto something. Yeah. That's my thought. I think that was a real case 15 years ago. And I actually think it's still the case in Spain. So one of the things I think I would invest more and more in Spain over the coming 5-10 years.
Oh, that's exciting. I have a very good friend you need to meet, the Danish guy as well, who lives in Barcelona.
He's smart than if he's Danish.
Exactly. No, but it's the whole angel sort of landscape, if you will, especially in Scandinavia, where I focus on, is very interesting because if you look at the hottest deal, it tends to be the same few names that you spot. So it's like you have a lot of angels, but they're just like with anything, there's a few that are doing the most exciting deals, probably because of the signal effect. They get called in on those deals. So
there's a food chain, right?
Right. And then I wonder, like, what do you think it takes to succeed as an angel? Like, how do you become one of those like top percent, the angels that get called in by the VC fund and who says, Nicolaj, we have this deal, super exciting, too early for us, but we want to send it to you.
You're building mutual trust, right? It's quite fun. I had to explain it once, and I said, well, there's direct distribution and indirect distribution, right? The direct distribution is that all the founders know you. And for some reason or whatever, either because you've been in TV or you built something or whatever, they actually think that you can add value. That's why I'm a social media slut, right? That's the reason why I'm active, is because I want to make sure that when the new Esben in Oslo is thinking about raising funding, that he contact me. That's also why I answer my messages, right? Because if I don't answer my messages, I'll get a bad reputation. It's okay to say no. And then there is the indirect distribution where the accelerators, the VCs or other angels know you, so they would take. So the first direct distribution for sure is more demanding, but that's also where you can see deals yourself. Low hit rate, you have to spend a lot of time. The indirect one is also taking a lot of time, but it's also more long term because you have to build relations to these funds so they remember you in 5 years. And I think what it takes is, I think the angel investment is a craft like many other things, like entrepreneurship. So you have to spend time on that. You have to do it over a long time. And like any other craft, you can learn from others. So if I'm going to build this table here, right? Yes, I can start from scratch myself, but I will also have a lot of value by learning from others who have built tables themselves. And that's why I think that learning, if I was a new business angel, I would find a way to kickstart it by working together with other angels, both for the know-how and for the network. It's really, really hard being just like the first person with money and thinking that you will get all the good deals, because you will not.
No, and I worked in venture capital, but I think one of the main reasons for doing this podcast is exactly to learn from more experienced angels and also try to build that network. Because I think you can take Harry Stebbings with 20 VC and many others now, that whole distribution and breaking through the noise, so to say, is just becoming so powerful. And you're seeing more venture funds also setting up their own, communication setups, podcasts, and all this. So I personally think that you say social media slot, and I laugh of that, but I think that just having almost, I don't want to call it famous, but at least having a face that people know and what you stand for is becoming more and more valuable. So yeah, you could sort of break through the noise.
Yeah, it's so. I've then decided to do it full time, and I think if you don't do it full time, then, which many don't, I think you should just find out what's your edge. Is it because you know everything about fintech in Scandinavia, so you're Mr. Fintech, or what is your edge, right? And again, if you're Mr. Fintech in Scandinavia and know something about that, then you again have both the indirect and the direct. Then you have to find a way to build relations to these VCs and others. But of course, you can also do it direct by being the voice that you're the thought leader, right? Then we're basically back to inbound and outbound, right? You could be the inbound, the expert in fintech startups in Scandinavia. You could do a podcast, you could do LinkedIn, you can do work, you could do, I started by I have like my catalog of free speeches I gave, because 15 years ago, I became one who know a little bit about funding or whatever. So I just started giving a lot of free speeches about angel investing or whatever. And that sort of built my network, right? And now I turn into be a generalist, but you could do the same for, I'm the biotech early stage investor, I'm whatever. Right? So it's like any other go-to-market strategy, right? How do you get people down your funnel?
But Nicolaj, I want to ask, you have written books about, fundraising, and obviously you know a lot about fundraising from having done it yourself, and then, being on the board of companies and an investor. Do you think the fundraising landscape has changed in the last, let's say, 1 to 2 years? And this is a little bit of what could you say, pointing question, since the whole venture capital space has perhaps also changed a bit after the interest rate went up and all this, and less capital in the market. And as you said, some funds are now closing down. Have you seen that affect the whole fundraising landscape in the Nordics where you focus?
I think there was a silly years, right? 2000 to 2020 years with the silly money, right? And I think if you've been in this game for a long time, you think that was a normal time. It was not, right? The normal time was maybe from 15 to 20, right? And we sort of back to that, right? Because it was just like money was too easy. And I can see it, I think, myself. I think the things I invested in 2000 to 2022 is not performing as well as the 2023 to 2024. Because I was getting more skeptic in 23, 24. It was only the hardcore founders out there. Valuations was not silly. So I think that has changed. I think we are sort of from silly money to, oh shit, to back to normal. But back to normal will then be at a level where there's maybe too much early stage capital. Not enough late stage in Scandinavia, but that's due to capital markets, right? If you want to raise 1 billion euro, there's no stock market for that for startup. Yes, if you're Novo Nordisk or whatever, but if you want to raise 1 billion euro on the stock market, you can't do it in Northern Europe. You can actually not do it in Europe. So we don't have this late stage. We don't have this huge fund or whatever. But on the early stage, it's getting crowded. I think that's one development you see. The other development is that all of us, we're scratching our head to find out how to position ourselves in the AI landscape, because everything will become AI now. It's obvious, right? That how it can affect things. It's not LLMs and other AI algorithms are not perfect, but still, it's marvelous how they can help us. And of course, there is no wonder that all these startups are rushing to that. Well, I think it makes sense. What doesn't make sense is, or what we don't find out, is where to be in the tech stack, right? Should you develop fundamental things, or should you build on top? If you build on top of fundamental models, what is your defensibility? I think that goes like in curves where we don't really know, like, oh, we have to do fundamental models. No, you can just be lovable. Hey, I would just say, if I was shareholder in Lovable, I think it's a miracle tool. I've sold half of my shares now. It's just like, because I think it's like, what is the risk that there will be a new Lovable moment where someone is just doing it much better out of nowhere in 6 months? I think it's 50%. Because we don't really know. We don't really know where to position yourself. But I think that is interesting. And I think now you see AI is going into the physical world. I'm actually an investor in a Norwegian company doing humanoid robotics. I think that would be extremely exciting to
Which
say
one is that?
It's called physical robotics out of Moss. And now it's interesting, like, bring me the coffee, right? Because right now the AI is only here. But the moment we have robots who understand the world and can freaking bring me my coffee, that'll be interesting. Oh, open the door.
Yeah, cook for me. That's the one. Clean and cook, and I'll be happy.
And we're not getting enough kids, right? In all of the Western world, actually all over the world, will be lacking labor. We need robots for that. I think that is exciting, and I think that's. And I think you see AI going from this hype to oh no cycles really, really fast. I think the only thing we can be certain is that it will have a huge impact of our life, and it will add a lot of value on the societal level. But then, how do you, as an investor and founder, position yourself, right? Because right now, I honestly think that already now you can't measure it, but it adds a lot of value. Health questions, right? Just the amount of all the things you don't want to talk to a doctor, what is going into ChatGPT, or I'm not talking about cheating exams, but the way your kids are using AI as a virtual tutor and improving their learning is amazing.
So it's super exciting. And the last question I was going to ask you, Nicolaj, maybe you answer a little bit, is what excites you most about the coming 12 months?
But now we've already talked about AI and AI in the physical world. I think that is one. I think I'm only invested in one there, but I think it's coming and become big. I think the next one is actually answering Esben. What are the problems that people like us are willing to pay for, why we have a lot of willingness to pay? I think it's health. Because the amount you and I will give to have 10 more good years is unlimited. It's unlimited. So you see people wearing devices like to capture your health. You see, and of course, longevity also have a lot of scams, whatever. But I think in general that health, where we're going from, hey, society pays, but what you pay for in society is you get the middle thing, right? You get a hospital bed, you get all these things, but there's a willingness to pay for all this, and you have the technology and you have the data. And I'm not only talking about new medicine, but also
preventive health and
fucking meditation, whatever. So I think health in general, I think that's the only, when you ask people like me, what's unsolved big problems? It's not yet another search tool to find a better vacation home or whatever. That's marginal value. But Nicolaj, how much are you giving? I will reduce your risk of a heart attack by 50%. I trusted that, right? What will I give? Would I give €1 million? Yes, of course.
Yeah. That is a very exciting space. So if you, especially preventive health, Nicolaj, if you see some exciting deals, feel free to share. And I promise I will reply.
What is entrepreneurship, right? Entrepreneurship is solving problems that exist. And I think that's why you look around and say, and coming back to you as an investor, you're trying to use your gut feeling about, okay, is that a problem that is so big and it should be solved? And that's the sort of first thing. And then the second of all, okay, do I think these people have a realistic chance of becoming the winners? Because if there is a big problem, then there will be hundreds of companies that are trying to solve it. There should be. If you can't find anyone. So, for instance, if you believe that humanoid robotics will become big, there should be 100 companies, not only the Tesla, whatever, that should be working on that. That's great. So, but that doesn't mean that the next one will be, do I believe that these guys have a fair chance? And I'm totally okay being wrong in 90% of the cases, because it's the 10% that pays. And I think that's what angel investing is about. And that's why it's a little bit different from later stage VC, where you have all these data to, how much are customers willing to pay? But angel investing is really still a lot about gut feeling.
And with that, Nicolaj, thank you so much. Super exciting conversation. And I love the very Norwegian background that you have.
Yeah.
All right. Thank you so much.
Thank you.